I've spent the last 8 months testing high risk income funds from YieldMax, but now it's time to make a move. I'm selling one of my positions, but you might be wondering why? Is it the NAV erosion, inconsistent payouts, or a disappointing total return? In this video, I'll break down everything I've learned from this experiment and reveal the numbers. So let's dive in. Alright, so the fund for today's video is NVDY, YieldMax's NVIDIA Option Income Strategy ETF. It works much like their other single stock income ETFs, using option strategies focused on just one company. Now let's talk about my position. I bought into NVDY on February 21st, 2025, putting about $1,000 to work at $21.71 per share. Since then, the share price has been on a pretty steady decline. At the time of this video, NVDY is trading just above $16 per share, meaning the stock has lost about 23% over the past 8 months purely from price erosion. My thinking going into this was that the dividends might be strong enough to offset the decline and still deliver a positive total return. That was the core of this experiment. Over these 8 months, I've been collecting dividends, but the payouts have been inconsistent. My first dividend was the highest at $1.61 per share, while the most recent payout in September dropped to about 64 cents per share. That kind of fluctuation is typical for YieldMax funds, so I wasn't expecting a perfectly steady stream, but it definitely made future payouts tricky to predict. So let's take a look at these dividends themselves and how they actually stacked up. From February through to September, the payouts totaled about $422.96 on my $1,000 investment. That's roughly a 42% yield, but there's a catch. I held this in a taxable account, and as a non-US resident, I'm subject to a withholding tax that gets taken off before the dividend even hits my account. After that deduction, my collected dividends dropped from $422 down to about $359. So in reality, my spendable yield is closer to 35.9%. Throughout this experiment across NVDY and my other YieldMax positions, one question that kept coming up is, when do I take profits? In the first few payouts, I used DRIP, reinvesting dividends to grow my share count and, in theory, boost future returns. I figured if I gave it enough time, that compounding could work in my favor. But after 4 months, I stopped using DRIP because my total return was not as green as I had hoped. It felt like every dividend I reinvested was just getting eroded by the declining share price. And that's when I decided to split all future dividend payouts. About half of each payout will go into a long-term ETF that I treat as a cashed out balance, while the other half will go back into YieldMax funds. I've been tracking this approach for the last 4 payments, and during that time I felt more comfortable leaning on other YieldMax funds, especially ULTY, since it's more diversified and has simply just performed better for me. Now, if we take a look at the numbers once again, after taxes I collected about $359 in dividends. The first 4 dividend payouts totaled about $200. These all went back into NVDY. That's roughly 55.8% of my dividends that I received. I was able to extract about $112 or 31% into SCHD as my more long-term ETF, while the remaining 12.9% went into ULTY. So that covers where every dividend dollar ended up. Now the next big question you might have is my exit price and total return. Remember, my original out-of-pocket investment was $1,000. I reinvested another $200 through DRIP, and eventually when I sold the position, it was only valued at $954, which means I lost all of those $200 in reinvested dividends and $56 of my original principal. However, I was able to cash out those $112 as part of my split dividend plan. So I did lock in some realized gains. Pretty simple math here. We can take our $112 in realized gains, subtract our losses on the shares that I sold, and my total return ends up as about $66.73, or roughly a 6.7% gain over the last 8 months. Now, am I happy with that outcome? Yes. Anytime I take profit in the market, I'm happy. More importantly, this was a learning experience. The biggest takeaway for me was realizing how important it is to build up cash a bit sooner. Maybe if I'd stayed patient and kept dripping, this could have turned into a cash cow. But for my risk tolerance, I prefer knowing that I'm building a steady cash reserve over time. What really stood out to me though was how much I lost on this non-resident withholding tax. I'm in Canada and we have accounts that are not subject to this tax, which is where I'll be reallocating this capital next. I'm still researching the best ETFs for that move, but I can't stop thinking that this experiment would have performed a lot better if I hadn't been losing a slice of each dividend to taxes. Now, if you're interested in more videos on dividend investing, specifically YieldMax and Roundhill funds, be sure to subscribe to the channel. I've got more content on the way here where I'll be sharing my own personal experiences and results. And let me know in the comments, what do you think of these funds?